Hello everyone, I'm your host, Eric Bird, here at StopStrugglingNow.com. And today, should I buy silver and gold? Should I buy precious metals? What's going to happen? We're going to talk about it. This is part of the Stop Struggling Now way. So please like, subscribe, click the bell so you get the latest updates. Now let's get to it. All right, so we're going to go over this gold and silver pricing. Should you buy? Should you not buy? Let's go through a little bit of history. So let's start off with just the simple facts of how much money people made back in the day. We're going to go by the chart. So like in 1964, as you can see down here, minimum wage or wages was about $250 an hour. I mean, $2.50 an hour. That would have to be 22.22 to be $2.50 an hour. But anyhow, $2.50 an hour. So as you can see on the chart, the equivalent of 1964 money into 2018 money is $20.27. That is a lot of difference. And why is it this way? Because there's something called inflation. Inflation is about 2.7% per year. So over the years, when you think that you had money in a bank account and you're sitting there thinking that you saved money, and actually you're losing money. And the reason why is the government's printing money as we speak. They're not just, you don't create money from anything. It's only created from a printing press. And the more money you have, which is supply, the less demand you have, because you're printing more, means what? Prices have to come down when you have more supply than demand. So basically that's why we keep having debt in the United States, and that's why inflation occurs, because that's what we do. It's America. Everyone has debt. So we're trying to do it the Stop Struggling Now way. No debt, low debt. Limit your debt. If you're going to have debt, at least make it earn money. So this is how we have gold and silver prices, platinum, palladium. And that's why a lot of people suggest to invest a small amount into these items, because they keep its intrinsic value. So paper money has no value. Gold, silver, platinum, precious metals, other things you can barter and trade for actually has a number. So if you lived in Venezuela or Turkey right now, you wish you had an ounce of gold or silver, because in the lira, for instance, in Turkey, it's 8 to 1. What does that mean? For every dollar bill you have, you get 8 lira. If you would have had an ounce of gold, then you would have more than 8 lira, because an ounce of gold is $1,100, roughly. So you would have been able to do 1,100 times 8, 8,800 lira. Big difference. You wouldn't have lost any value. And this is why the Turkish government is telling its citizens, be patriotic. Give us your gold. Give us your silver. We'll give you some of this worthless paper. That's how they do it. Same way in Venezuela. Same thing's going to happen in Argentina. So this is why a lot of pundits, a lot of people say buy a little silver, buy a little gold, but wait, there's more to the story. Because it's not just simple enough to buy silver and gold, because if you'd have bought silver and gold like 5-6 years back, you're holding something that does not increase in value. It would have still been some low amount. I mean, you could have bought gold at $800 an ounce and lost money. You could have bought gold at $1,300 an ounce and lost money. So you just never know. It just kind of stabilizes, and that's why you should just have very 10%, 8%. And while I'm saying this, this is for entertainment purposes only. But you should have a little bit just in case something happens. So I'm going to give you some charts, and before I do that, what we're going to do is go over the inflation calculator so you understand what's going on. Because right here in 1985, if you were making $500 a week in 1985 money, that equates to $1,100 right now. The wage increase between 1985 and 2018, they didn't add another $500 to your wages. You're not going to be making double what you made in 1985, okay? If you were, then everybody would be living lovely. Because if you made what you made in 1985 and doubled it, a lot of people might be happy with that number. So this is something that you always have to keep in mind when they're doing things like this. Stock guys, what do they say? They say, come check out your stock. If you would have invested, and this is the long one, but we'll go with 2000 to keep it in the latest dip. But let's just say this was a stock price. It's an index. This is Standard & Poor's index. And if you would have bought a stock at $848.18 in 2003, and then you woke up this year and you said, oh, 2,700, whoa, that's like 3 times my money. We're loving life. Except there's one problem. When you were down here at this 815, before that you were at 1314, would you still have held it as it dropped in value? Would you have waited till it got down to this $800 number, 815 number? 911? No, people were jumping out of buildings because they were losing money in the late dot-com bust boom cycle in the early 2000s. So the question is, you might have sold just like a whole bunch of other people, but the vultures, the 1%ers, get to come in and buy up the leftovers. And while they buy up the leftovers, they get the run up now. And so sure, you would have went up to 1,500 from the low of 800 if you were lucky enough to buy, and almost double your money in about 6 years. You'd be loving life. Everything would be gravy. But unfortunately, in 2007, 2008, 2009, we had a crisis. So once again, would you have held your money during this time frame as it dropped, as it goes down in value to $735? Would you have held it from 1,500 to 735? Highly unlikely. You would have dumped it just like everybody else. So then from 2008-9 up until now, it's been one hell of a ride. Everybody says put your money in stocks, put your money in bonds. But what's happening now? The government, the CEOs, they work together. And by the way, before I get to that, because that's one of my little pet peeves, I was just showing you the good stuff. These are the charts that you see from financial places like mutual funds, 401ks, when they try to get you to invest. What they don't do is they don't click on this button right here, adjusted for inflation. Changes a whole bunch then, because now you could see in April of 2000, you could have bought a share, let's say, I'll keep it in share terms, $2,100. All this little roller coaster ride where you're losing money 1, 2, or 3 years later, rises back up, you still lost money, still haven't gotten anything back, drops all the way back down, you're panicked again, lost all your money, and then now what happens? You come all the way over here and it's $2,600. You went from $2,100 to $2,600. The reason why? Because of inflation. You didn't really make that much money. In fact, what is that, $500 difference over 18 years? That's not a lot. But yet people are throwing their money in the stock market. Why? Because some people are lucky enough to buy on these dips. And then they're lucky enough to say, hey, I'm going to sell by just taking a little bit of profit. I don't need to take a whole bunch, just a little bit of profit. If I double my money or 3/4, 75%, I'm loving life. I'll take that. But a lot of people like to get greedy. And if you're lucky enough to buy over here in 2011 and then keep your money and be able to obtain it and take out your money from your 401k, Think about that for a minute. Mutual fund, pension fund, who's tied to these index and stock funds. But you can't, because they're going to apply a penalty to you. And then you're going to have to prepay on some of the taxes of the money as well. So they want you to keep your money in here. They can't afford a run on the bank because there is no money at the bank. Try to go in your bank and take out $20,000. They're going to look at you more than likely and say, hey, come back tomorrow. No, we're not going to have that going on today. So these are the kind of things that you got to watch for, and this is the reason why people say buy gold and silver. But I'm going to tell you, you may want to wait on buying gold and silver. I, for one, I'll just cut to the chase. I get my precious metals from APMEX. So since I buy a little bit, not a lot, an ounce or two here and there, whether it's gold, silver, either way, gold grams, silver ounces, just a few here and there, just a little bit. I know it's going to go down, and I'm going to show you when and how you know. But let's go over here to this tax cut thing. This is my little pet peeve. Tax cuts, these buybacks. You know the tax cut scam that happened last year. They went and spent $437 billion buying their stocks back. That's right. The companies bought their own stocks back. The stock market has went up, as I showed you the chart. And what do these guys do, the CEOs and executives? They've been selling hundreds and thousands of their shares. Hundreds of thousands of their shares after they have run up the stock price because you're believing the stock is increasing. They're actually been pumping it up, and they're about to dump it, and that's why they're all trying to get out and sell their shares. So this is something that you need to pay attention to. This is what the 1%ers are doing. So you might want to ask yourself, why is JP Morgan all of a sudden trying to hoard silver? Yeah, I know my phone's ringing, but I can't answer it, sorry. But why is JP Morgan trying to hoard silver? There's a reason, and I'm about to get to it right now. So here's the silver prices. As you can see over here, it's $14.78 today. The gold is $11.90 right now. You can see on this chart, I'm on the silver chart, and this is APMEX. I'm using their history. So as you can see right now, this could only go back to 87. So even when in the late 80s, what happens when 2 terms of Reagan went through? After his tax cuts, market started, there was a recession, but you see here, silver didn't do anything, it barely reacted. It went down as expected, a little bit, because when there's a recession, the government doesn't want you to put your money into gold and silver. So what do? They manipulate the price. So this way, your stocks are going down, the housing market's going down, your mutual funds, your 401ks, any other investment vehicles going down. They don't want you to put it into something that you can actually have at your house. Gold and silver and platinum and palladium and any other precious metals you can actually have physically at your house, in a vault somewhere. In a different country, you can have a vault. You can have a vault all over the place. But the fact is, that would be in your possession. Greenback money is just paper. So therefore, they depress the market to make sure it stayed down. So there's nothing happening at that juncture. They just keep it. And look, you bought your $5 an ounce back then, no big deal. It drops to 3, 4, just roll along. In the late 90s, 2000, another crash of some sort. But yet again, nothing happens on precious metals. So those pundits that always say buy silver, buy gold and all that, just like with stocks, timing matters. So if you would have bought silver, gold, that's a long time to hold something, 10 years, and basically break even. That means you haven't done anything, and that sure hasn't put anything in your pocket. So here's what happens. In 2005, 2006, all of a sudden there's an uptick. So an uptick generally means, I contend, that there's potentially trouble in paradise. So here's the silver price starts rising, And now we all know in 2006, 2007, 2008, there's the housing crisis and another financial crisis and an economic collapse. And so it starts rising. So people who have been holding it at $5, $6, $3, they're loving life. They've doubled their money now. But did they sell is the question, or sell some of it, not all of it. But look, it gets up to 16. They're loving life. But hold on, wait a minute. Remember, the government manipulates the markets. So now everything goes crazy. It starts dropping down. And the government, true to form, they're not going to let you hold gold and silver. Why? Because while Rome is burning, United States is on fire, we're burning, they're going to try to manipulate the price and drop it. So now everybody who's up here at this $18 per ounce, they're like, and when it starts dropping to 16, you're like, wait, it's at 11. You're probably going to sell some. Why would you hold it after you went up from 18? You bought it 5 or 6, almost 3 times your money if you bought 6 or less. So why? You wouldn't be holding the money. You're like, oh my God, it's starting to go down. This is crazy. And while it's going down and the USA is burning, stocks are burning, the housing market is burning, they don't want you to take your money out of the stocks, bonds, banks. There could be a run on the bank. Millions of people would not get their money. So therefore, they have to manipulate the price once again. So I'm saying, in a year or two, probably I'm just giving my prediction, T-11, things are going to start hitting the fan. It's already started, but T-11 is going to be a situation just like this. So if you would have been savvy enough to know that to buy at this dip at around 11, 10, anywhere in here, you would be loving life for a certain amount of time, because in 2009, you could have entered the market and said, okay, I'll take a gamble at this. I'll buy it at $11.50 an ounce. And look at here. For the next 2 years, it rises somewhere up to like 39, 40, believe it got up to around 40, yes, $40 an ounce. You could have 3 times your money, almost 4 times your money. And if you would have held it the whole time and kept some of it from 2000 and 2002, when it was only $5 or $3 an ounce, you would be more than loving life right now. So this is why the pundits and even me say, get a little bit. You don't have to go crazy, just a little bit, because basically you can hold it and you can pass it on to your heirs without actually passing it through the government system. If you had $1 million in the bank or anywhere for that matter and you pass away, the government generally can get a share of that if you don't have it properly on your will or way to transfer it. So these are just some of the things. You can actually transfer precious metals without even doing that. You could just say here. So now what happens when it tops out? The market, everybody's shaken up. The U.S. government says, okay, people have gotten lucky, or we've let it run up, and now we have to put a halt to this. We can't have gold and silver just going up like that, because we need money back into the stock market. We need money back into housing. We need investment capital to go for our paper money. So as you can see, things start coming crashing back down 2-3 years later. And of course, what are you doing? If you were up at 40, I highly doubt that you're going to be waiting all the way down to 18. And you're probably not going to be holding at 19. And while this thing's going down to 17, I'm pretty sure you would have sold, because even then you're still well above what you would have bought it for back here. So there's an advent of something that the government did. They came out with these silver, I don't want to call them silver dollars, but that's what they are. Gold and silver dollar bills. They're paper, and they're calling those futures. And actually, that's not even gold. But what that did was you print up enough of those, people think it's kind of like gold, and therefore you can depress the market, because now there's seemingly a vast amount of supply on the market of gold and silver. So just keep this in mind. So as you can see, we're bringing it down to today's time, and it's 14, 19, 15, 16, 14. We're going to stay in this range. But this is why you still have time. You don't have to be rich. You don't have to be famous to get into precious metals. There's going to be another downturn, just like 2008. And you can sit there and wait until a year later or 6 months later until it gets to half the price, $6, $7, $8, $9, $10, whatever you feel comfortable with. But sometimes you got to buy. And like me, I'm going to be buying when it drops to 14, when it drops to 12, when it drops to 11. I'll still buy a little bit here and there because it's going to be cost averaging. So you don't have nothing to worry about there. Forgive me, I got to get this phone off. So anyhow, what I'm trying to say is we'll go to the gold, and the gold is even more interesting because what you have with them from 1988, you can see where it starts here, it generally just stays, you know, no big deal. You know, just rolling along from 300 down to 280. The government, they got themselves out of the gold standard back in 1972 under Nixon. So it used to be for every ounce of gold that was backed by actual paper money, and they said, forget that. We'll just go to the printing press. That way we don't have any constraints. We can just print as much money as we want and create as much debt as we want. So that's why they always had the gold prices depressed. But what happens in that crisis when 2005, 2006 rolls around, that's when it starts happening again. This time they can't hold back because around the world you can exchange your gold for the actual value of what it is. So now they have no way to control it. And it goes from, as you can see, these people back here, if they would have bought at 344, 380, 400, this runs up all the way for 3 or 4 years up to $1,600, $1,700, $1,800. That's 6 times your money in most cases, 5 times your money in a lot of cases, 4 times your money. But would you have been savvy enough to sell some, not all, because you're always going to need something. Because again, if you live in Venezuela, Turkey, Argentina, you would love to have an ounce of gold or a few ounces of gold because their inflationary rates are so crazy, it's ridiculous. One bolivar is now, just for like $20 meal, is like 9,000 bolivar. If you would have had an ounce of silver, that's almost the cost of a meal that you would have right now, and they could have changed it in, went over to Colombia, exchanged it. Yeah, you would have lost a little bit of value, but you can come back with a lot more money. But just like every country, give us your gold, be patriotic, give us your silver, give us your precious metals so we can give you back some of this bogus paper that we're printing up. That's how it works, ladies and gentlemen. So of course, they come out with those gold and silver dollars, put those on the market just so they can depress it back down to today's numbers. And that's why it's going to stay down here at today's numbers at around 1,100, and it's probably going to drop. But again, when Rome is burning, they're going to drop the prices. So just keep that in mind, and that will be your buy opportunity. So again, I mentioned earlier J.P. Morgan, and I should have mentioned there's something that happened in the 70s where they had the Hunt brothers who were basically just hoarding all the silver. And so what they did was when stuff hit the fan in the late 80s or late 70s, there was the oil crisis and things like that. In the late 70s, the price went up to $50 an ounce. These guys are loving life down here. But what did they do? They actually also had bought some of the silver on margin. And it must be nice when you can borrow, so to speak, from the bank, so you can buy silver just in case it does go up to 50 an ounce. But read this here. They couldn't meet their 135 million margin call. But guess what? The bankers, they let the brothers off the hook. All they did was say, hey, we're not going to give you any money anymore. So just like what Wall Street did in the 2008, 2009, and they got the bailouts even though they messed everything up, same thing happened with them. They were able to make money on the upside and not have to pay their bill. Must be nice. Unfortunately, ordinary citizens like us, we don't get that luxury. So keep this in mind. I had to have a talk with you about this. There is a better time to buy gold and silver, so don't listen to these other people talking about the sky is falling, go buy it now. All those people would have had you broke because you would have still been sitting on money that you could have invested in something else that could have made you money. So now, just wait for the trigger points, unless you want to be like me and get a little bit here and there. Otherwise, all you got to do is just wait. There's going to be a crash. In fact, housing prices are crashing as we speak. And I don't mean crashing, I just mean losing 1%, 3%, 4% for the last 2 months, each month. So just keep in mind, it's coming. These buybacks, it's coming. They just inflated the market. It's going to come down. So people are going to need to put their money somewhere else. It's just that the government's going to do their thing and you got to do your thing. So that's it. That's the short version. So anyhow, thank you for watching. And please, hit the like, the bell, so you get the latest update. And get us on Instagram, facebook.com/stopstrugglingnow.com. And as always, keep your head up, keep moving, and until next time.